goes on. Play the addiction recovery video.
Here's your story.
I teach for a theater. I also bartend, and I do stand-up comedy. All three of those are casualties of this pandemic, so I am now unemployed, and filling my time is necessary.
In this isolation of the coronavirus pandemic, all challenges are unique.
I'm over 18 years clean and sober, so recovery for me isn't just not using, it's trying to get to meetings where you can get that support, and a lot of that support has been cut off because a lot of those meetings are not available anymore.
For many struggling with addiction, in-person group meetings have long been a lifeline. Now, as CDC warnings against large gatherings have forced many meetings to shut down, those in recovery are worried.
The isolation, the unemployment, all these things, it's just more logs on that fire. It's just one more reason to be like, yeah, I guess it wasn't meant to be. I work in a couple of fields where I'm around vice a lot, and that is not a dicey situation for me. You know, idle time, where your mind can run away with you and start excusing things, that's a little bit more dicey.
Yes. How are you?
We're doing well.
Peter Bergen is keeping in close touch with his cousin, Jack Sandhaus. He's also a recovering addict.
There's a tremendous amount of uncertainty, and with that comes tremendous anxiety. And so when people are anxious, they're looking to quell and calm. And people don't like feeling uncomfortable in their skin. They look for a relief, a release, a way to escape. No one's looking for me. I don't have to show up.
Follow. We just make some ramble with 73-year-old people that they're all complaining of shoulder pain. They've got her acting wheelchair now. I've got 14 North Central at Kansas AER with their patient out there.
Clear.
Good.
Stand by.
Airway 501, where's the rubber get? Copy.
Just leave some being safe. But don't even move on tonight.
I got that.
Forty. Fire to get.
Okay.
Testing.
10-4,
Testing. Testing.
Six, I copy. Negative 2-3. Good. Negative 50, I see local comes 2. They are both ID only.
Letter 316. Everything I get to is very secure tonight.
I copy. Baker 205, Baker 204, copy call.
People don't like feeling uncomfortable in their skin. They look for a relief, a release, a way to escape. No one's looking. No one's looking.
1511 Grace Street, Southwest. 1511 Grace Street, Southwest. It's the residential alarm at the Ballard residence showing sunroom door. Looks like it runs off Grace off of South Lee Highway. It's the only house that's actually in the county at the very dead end of the road.
10-4.
At the very dead end of the road.
10-4.
At the very dead end of the road.
10-4.
At the very dead end of the road.
10-4. We're clear, Nova. 603.
Okay.
I'll be back. 10-8 citation issued. 2 charges.
Copy. It's going to be 3501, 3501 Ramblewood Circle Northwest. Have a 73-year-old female that fell, complaining of some shoulder pain. They do have her back in her wheelchair right now. 203, we load at 1084 seizure. I copy.
Both units 10-8. No, sorry, 97.
I copy. Good. Can you give me the numeric for Floyd Village Apartments, please? It's 1300 2nd Street Northeast. Thank you.
Not 12.
512.
I'll be clear from here. They can ride up to the hospital.
I copy.
Sure, Scott, great to see you. Great to be on with the. Again, as you cover a lot of different types of trades in stock options and equity index options. Well, there are also options on futures. And again, futures market is a different market, different derivative that if you want to trade it at TD Ameritrade, you do have to be approved for it. It is a separate approval, but you can get access to different markets, different asset classes. And with gold, we like to say one of the products is gold. The symbol for that is /GC that you can put on your watch list and watch the gold market. And so gold we consider more of a trading the gold future. You can get more of a pure market view on gold rather than going to look maybe for different ETFs or
on the corner
looking at different stocks if you want to get access to gold. And like I said, gold as well, Scott, has options on it and also has weekly options.
Well, that's a great takeaway because a lot of people maybe they don't have a futures account, and so I'm glad you just mentioned about what the steps are involved to do that. But also you need that futures account, Stephanie. Correct me if I'm wrong, to trade the options on the gold future. But what the good news there, Stephanie, is that everything we've learned or that our viewers have learned on following your first trade. The different kinds of option strategies. Can most of these be used on gold itself?
Rogers Street Northeast. There's Mexican
yes,
restaurant.
Actually, what we like to say is an option is an option is an option.
And his
so
muscles are hurting and tense up, unable to stand. Should be sitting at the front door of the business.
So a vertical.
Wearing a jacket, white t-shirt, and hospital shoes. He's calling from the restaurant phone.
What's the name of the restaurant?
I believe it's the one right there behind Sonic. I believe it's the La Fogata Mexican restaurant.
It's going to be the one there off Stewart, correct?
Yeah, that's correct. That little road that runs there past the Sonic.
Okay, we're in route. 511.
511.
Will this be the party that we have treated at the buffet there multiple times?
Most likely, he's going to be one of the. It calls quite frequently.
We're all being route.
Okay.
Beginning.
507.
We are non-huge Nova 8158.2.
Back up.
7797.
I got
10-4. So for it was accidental here. We're about 10-8. So 10-6.
I got
10-4. So for it was accidental here. We're about 10-8. So 10-6.
I got
So for it was accidental here. We're about 10-8. So 10-6. So for it was accidental here. We're about 10-8. So 10-6.
Strategies designed to harness changes in implied volatility. For instance, time spreads, like counters and diagonals, are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on ThinkorSwim for the full options for volatility course and a whole lot more.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay. I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more. This is my headquarters.
It's a 13-hour flight. That's not a weekend trip.
15 minutes to report.
Take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have ThinkorSwim mobile?
So I can finish analyzing the risk on this position?
You two are all set. Have a great flight.
Thanks.
We'll see you. Ah, they're getting so smart.
Choose the app that fits your investing style.
It's a 13-hour flight. That's not a weekend trip.
Midday Movers is a 30-minute fast-paced look at what's moving the markets you trade.
It's about to move in the overbought area. That's not a bad thing.
Stocks, bonds, ETFs, commodities, your double dose of energy.
It's looking at a deeper dive. It's not just about their earnings.
Join me, Ben Lichtenstein, the host of Midday Movers with Lichtenstein, Monday through Friday at 1:30 p.m. Central Time, right here on the TD Ameritrade Network.
Technical traders, the chart master is in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
For investors, confidence is key, and the key to gaining confidence is watching your first trade. I'm Scott Connor, here to make sense of today's market news in real time. Let's just jump right into the four major indices, get a quick check on what the markets are doing, and take you step by step through investment and trading strategies.
At what point have we kind of capped out our maximum loss with buying this call to protect us?
Your first trade, airing live Monday through Friday at noon Eastern, only on the TV. For investors, confidence is key, and the key to gaining confidence is watching your first trade. I'm Scott Connor, here to make sense of today's market news in real time. Let's just jump right into the four major indices, get a quick check on what the markets are doing, and take you step by step through investment and trading strategies.
Good morning and welcome to Fast Market. It's Friday, March 20th. I'm Alex Coffey. I'm joined by the co-host of Fast Market, Kevin Hinks, live from the suburbs of Chicago. As you can see, Kevin, the background here, the windows are open. You can finally look outside a little bit with the S&Ps right now trading up 50, trying to stage back-to-back updates for the first time and what's been a wild ride the last couple weeks. So we'll see how the rest of the session winds up. Taking a quick look at some of the other major asset classes real quick, Kevin. You got the NASDAQ up 2.7% in the futures market, and the Russell again is leading the way. So kind of this trend that we saw start yesterday, Kevin, where some of the underperforming parts of the market were catching a bid, has bled over into today with the Russell in the cash index up 2.7%, but in the futures up 4.25%. So some big moves in the small caps there. Crude oil, though, not able to stage another gain, at least thus far, down 3%. But Kevin, what's sticking out to you so far this morning? 0.7% in the futures market, and the Russell again is leading.
Well, a lot of things that are sticking out to me, Alex. Yeah, another good, solid day on the green side in terms of futures. But look at the VIX. The VIX is down a lot today, as we've been kind of calling on this show with any kind of settling down in this market, which it appears it's settling down and starting to go green here for more than one day. That 80-70 level on the VIX just was not sustainable without big percentage movers. So even though the market's still moving, that uptrend, people starting to make some bets on volatility here and ease some numbers out of the implied volatility. Not really surprising. VIX right now 58, down about 14 points on the day. So taking some juice out of the implied volatility. Not really surprising based on the levels we were at. Alex, back to you. So even though the market's still moving.
Yeah, and Kevin, so this kind of ties into a takeaway that I brought to the Market on Close panel yesterday with Scott Connor and Oliver Rennick was, my first takeaway is I'm looking to the VIX right now to confirm any type of rallies we're getting. And today seems to be, if it holds and the VIX levels keep working their way lower, to be the first day where you've seen some type of sustained decrease in volatility. And of course, we have a ton of session left, but from your experience as a longtime trader throughout the decades here, seeing these different financial crises and crashes, i.e., 1987 or, of course, the 2008, 2009, am I on the right page here, looking to the VIX to confirm whether these rallies are going to have any legs? And the VIX levels keep working their way.
Yeah, I believe so, because that's the decision traders are making, right? I mean, if there was bids for implied volatility in the SPX contracts, and if there were bids throughout the market for puts and downside protection in terms of applied volatility, that number would be holding and higher. So I think the fact that the VIX is easing in a little bit is not the worst indicator for this overall market. Now, still a long way to go, but remember what I talked about on Wednesday, Alex, how all that Tuesday night, all that, and during the day Wednesday, a lot of the news headlines, negative, 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 negative. They just kind of peppered the market with negative headlines. You're getting a lot of positive headlines today. I could read you through a whole list. Pretty good positive. How about the news out of Walmart today? Giving everyone a raise, giving everyone a bonus, hiring 150,000 employees to get through this. That is amazing. Amazon hiring, Walmart hiring. There's just a lot of good news. Just coming on the last half hour, Steve Mnuchin came out and talked about their pushing the federal income tax date back to July 15th. I think that's something that's just easing people's fears. Big purchases in the bond market and securities and mortgage market by the Fed today, totaling $107 billion, $75 billion in treasuries, $32 billion in mortgages. They're providing liquidity. They're driving down interest rates, as you can see in the bonds and 10-year yield. So there's just a lot of good news coming out today. JP Morgan, just in the last hour, has announced raise $1,000 bonuses for what they consider their front-end employees. So, the market's just getting peppered with some good news, just like it did negative, and the market likes it so far. So far, so good, Alex. In mortgages, they're providing liquidity.
No, I completely agree with you. And I'm glad you brought all that stuff up, because that is extremely important, especially when you look at kind of the steps that some of these companies are doing that are in a position to maybe kind of play from strength to kind of help hold this economy up. And everyone's kind of banding together in this time of uncertainty, and it's good to see. But, we used to always talk about Fridays kind of being our FANG Plus Friday day in terms of talking about some of these mega cap companies and the impact that they have and looking at trading those. Before we dive into any specific names, I want to talk about just the idea, which was kind of actually my other takeaway yesterday, was it's hard to imagine this market staging any type of a comeback without its major mega cap leaders being kind of that, the one that puts everything on its back and kind of carries us back up. And you're really seeing that today. You got Apple up, 2.4%. That's $5. You got Microsoft up another 2%. Alphabet up a percent, and of course Amazon, you mentioned, up 1.6%. So seeing these names in the green is the first step. To your point too, it's way early, and there's still probably weeks and weeks and maybe even months of volatility ahead of us. But a day doesn't isn't a trend, but it starts a potential trend. Starts at one day, and this is day two. We'll see if we can continue working our way back. I don't see it being a V-shaped, straight up recovery by any means, but it's hard to recover at all if you don't have those big market cap weighted companies carrying us. So Kevin, what are you focused on? And you talked about Amazon and Walmart, but is it important for Apple and Microsoft to participate as well? Maybe Alphabet? But a day doesn't.
Sure, think about it, Alex. We talk about it a lot on this show. Apple is in 3 of the 4 major indices. So who's going to lead? someone who's in every industry, every one of the indices. So, take out the Russell, which, the Russell firing back is a great sign. But remember, they lost the most, too, from the highs. They were 42% off their 52-week highs before they started to recover. So that's a really good sign. But yes, I want, and it's a little bit predictable, right, Alex? If you think about it, people are going for what? The blue chips. The stocks that they can feel comfortable about having in their portfolio, and the ones that have the best case in this new environment that we'll find ourselves to fire on the upside. I think Apple, Amazon, Walmart, the FANG stocks, those are the ones that people are going to migrate towards, and you're seeing that today in this market, Alex. And it's a little bit predictable.
Yeah, and we're seeing some of these names too that were directly hit. So things like Square, less consumers, less payments going through a company like Square that were really hit. Even though a lot of people love these companies at the high 60s, the 70s, trading down into the 30s, but catching a bid today up 7.4%. Things like Uber was over $40 before this coronavirus story became an economic story as well as a public health crisis. Traded down below $20, pretty significantly below 20, has now popped back up to 23.58. That was up another 15% again today. So seeing some of these companies, along with the Russell 2000 as an overall indice, getting absolutely taken to the woodshed, catching a little bit of a bid. It's a little bit too early to say, hey, we're out of the water by any means, or out of the uncertainty, because we're not. But it's important, I think, to show some vows of confidence into some of these names that have really been beaten up alongside some of those major players that we were just talking about. But Kevin, let's talk about one of these companies a little bit more in depth here. Let's talk about Apple. So when you're talking about Apple, the first thing that I always hear is, it's an iPhone company. We know that, okay? Probably less people are going to be going to buy iPhones during this particular situation that we're in right now. That doesn't surprise me. But does it really hold you back from upgrading your phone 2, 3, 4, 5 months down the road once we're past this? I'm not sure. We know that they've moved into this more service-based company, mobile-based games on the phone, obviously their Apple TV Plus, things that are going to be probably getting more and more attention throughout this uncertain period where people are quarantined in their homes and staying, in that social distancing away from other people and trying to keep themselves busy on their own. I would assume that that's probably going to help Apple the same way Disney Plus is helping Disney with its parks closed. But Apple, the big story is, of course, the amount of cash it sits on and its ability to basically, just continue business as usual without having to ask for any help, at least for some period of time. So, Kevin, when you're looking at something like Apple and you see the amount of discounting that's taken place in Apple over the last month, going from over $320 down to $251 currently, and that's up $6 on the day. What do you make of what's going on there? And, obviously things were priced to perfection with it way up over $300, but $70 out of the company, it seems like quite a bit.
Exactly. And that may have something to do, Alex, with it being in 3 of the 4 major indices, right? You sell those futures, someone that buys that future has to sell that basket of stocks against it. Whether you want to sell Apple in that basket or not, guess what? You're selling Apple in some of those futures baskets. So that's why we always talk about on this show, Alex, when stocks go down, no one is safe, right? If the major indices go down, you can love Apple. But if you sell that basket of stocks against a future, you're net selling Apple stock against that future that you bought. So there's just natural pressure on these names, no matter how good they are. I mean, think about it. We were joking the one time on the air how Clorox was down $2 one of the days and breaking big. Stocks like Clorox, Walmart, before coming back, they all broke down hard. When I can't imagine a scenario where they're not firing on all cylinders at those companies. And the news out of Walmart today shows you that they're firing on all cylinders. They're trying to hire 150,000 people to handle all the excess. And that migration to the companies that we used to use to the companies that we use now, and Apple's one of them. You may have a whole world, Alex, of consumers out there and Americans out there like this, right? And that's how they're communicating, that's how they're looking, that's what they're doing. And that's an iPhone. That's some type of smartphone that they're looking at. So the use of Apple and the use of Apple's services are not going down anywhere. They're only going to get bigger, as that, for a lot of people in the world, in the United States, the most powerful computer they have is the one sitting in their pocket in their smartphone. So the indices took Apple down. That's why Apple will fire back on the upside, as the indices do in 3 of the 4 indices. And as we joke about a lot on this show, they don't ring a bell on the highs, or in this case, the lows. Are not going down anywhere. They're only going.
No, and you brought up a ton of good points there. Let's start with the idea of everything going down. I mean, look at just Amazon, another one of these names that is often tied together with Apple and Facebook and everything. Amazon traded down to 1626. In the last 10 days, it's up almost 15%. It's back over 1900 now, but it was up almost to 2200 before this move started. So to your point, everything kind of gets sold at the same time when you have these major washouts in the market and valuations are taken down as the uncertainty settles in. But I also want to come back to your point about communication and where technology lies in the everyday life. I mean, I think you can make a pretty strong, if not, almost a consensus agreement on the fact that, smartphones are no longer a discretionary item. They're almost a staple, at least in the American life, in terms of, a product that everyone has to have. And it doesn't have to necessarily be the iPhone. It can be any of these, providers and developers for these different phones. But the iPhone, of course, is more popular here in America than some of the other competitors on the Android side. But when you look at it, it's much more of a staple in the everyday life than it would have been, even 10 years ago. So it's incredible to see how much that's into our situation now. But I want to talk about trading Apple, because you made a lot of great points, Kevin, about how this is a company, and you can throw Microsoft in there as well, that's in 3 of the 4 major indices. The only one it's not in, of course, would be the Russell 2000. And maybe you already have long-term exposure to the market. Maybe you already even have positions directly in something like Apple, and you've been invested in there for a long time. And of course, given this move, you've seen that portfolio get marked down alongside of it, whether that's a direct investment in Apple or in other things that are correlated with Apple. You could almost, like we talked about, using futures or using index products to hedge your portfolio, you could almost look to Apple and take, whether that's selling some type of an upside call spread or doing something to get some short deltas in Apple to, in a way, kind of use those correlations to take off some of your directional risk in maybe some of your other investments or other products. Thoughts on doing something like that, Kevin?
Yeah, hedging your positions, especially if you bought new ones in this dip, right? If you added to an Apple position, hedging your position on the upside via covered call, via short call vertical, it's not completely out of the question, but just make sure you're doing it at a level where you give Apple some room to run. What you don't want to be at the end of the day is a bug on the windshield of a big move in Apple, and you hedged it too close. One thing consistent with this market and the moves we're getting, they're outsized moves, right? This market is ripping, both on the upside and the downside. We've already got 1,000-point range from overnight to now in some of these futures. So you've got to really be careful that what looks like a big move, what seems like, well, it can't move $10 in a week, can it? Look at Tesla. Tesla moved $500 over the last month. So just be careful that you're giving yourself enough room. Really look at that expected move based on the implied volatility. Make sure the probabilities are in your favor, and don't get caught being a bug on the windshield of a move that goes right over your strikes. Just selling calls, still a good strategy against long stocks. Just give yourself more room in these high volatility environments. And oh, by the way, high implied volatility will give you that ability to widen out your strikes because of more premiums in those far out options.
No, and I think that's the that I was getting at is with volatility so high, you can maybe give yourself some room selling some of this stuff. But I think you hit the nail on the head in terms of what I was getting at. I don't necessarily think that you'd look to sell this call vertical. The one that we were looking at was actually the March 27th, so just going out next week, 262.5, 265, keeping it real tight, real risk defined. That's only $12 out of the money, to your point. But if you're thinking about this as a way to reduce some of your risk, complement some of your already existing long deltas, whether that's in the Qs or that's in the SPX, or if that's something that's going to be related to Apple in particular, or something that Apple's strongly correlated to, this is a way to chip away at the long exposure given the volatility that we have right now, but also giving yourself a little bit of upside and also taking in a little bit of potential premium on this, where even if it moves a little bit higher and that premium comes in, you can supplement the portfolio a little bit, chip away at the cost basis. I'm not sure, to your point, that I would be selling aggressive positions to get short in a name like Apple that we just pointed out, ways to potentially weather this storm for Apple, just simply because it sits on billions and billions of dollars of cash. But if you're doing something to reduce deltas, you got to have a little of meat to it. But also, if you're genuinely wanting to be long in the long term for Apple, keeping that to a call spread and not necessarily just selling the covered call, and you're not fully capping your upside, you're just sort of chipping away at your basis just ever so slightly. So Kevin, that's one way to kind of complement the portfolio. And again, the one we were looking at was the 262.5, 265 call vertical. This isn't just for next week, so a little bit aggressive, a little bit inside that one standard deviation move that you were alluding to, but a complementary position. I think we need to stress that point. And also, what's crazy too, Kevin, to your point about volatility, we talked about volatility coming in. This was trading at 95 cents with Apple trading a little bit lower when volatility was higher. So volatility has actually come in faster than we've moved, and it's actually down to 90 cents now. So the spread has actually moved lower, even though Apple has moved higher. It shows how important that volatility component really is. But Kevin, if you were going to look at something like this, would you do it structured a similar way, or would you look to add a little bit more duration, given what's been going on? This was trading at 95.
Well, I don't mind keeping my duration very low. That is always, whenever I'm selling something like this, I'll sell the closest date where I can get enough premium to make it worthwhile. And that's literally the way I do it. I will I'll go one day if I think I can get enough premium in there to make it worthwhile, because I want that theta at its highest level. But I'm looking on my screen here on my ThinkorSwim platform, and the expected move for Apple next week, $24. So the calls that you're selling are only halfway into the expected move. Now that puts up a red flag with me that you have to be careful there with that. Now, sometimes, and I have done this in my career, if you bought that dip in Apple and you've got deltas, long deltas or long shares at a considerably lower level, sometimes you dare the market to take some of your deltas, and you need some short deltas against something in case the market stalls here, right? And that theta number on that spread will be a good one. It'll be one that will look attractive, but make sure that you're nimble on any move to the upside, because that is only halfway. $10, $11, $12 is only half of the expected move for next week. And sometimes you want it to test there because you bought them lower, but just be careful on the duration you're using. I like little, you're only giving it a week to get up to that level, but you also don't want to be left behind and be having to scramble to get that call back or that call vertical back. So just be cognizant of what you're doing there. Use the probabilities. This is the time to use the ThinkorSwim platform and all the tools it has to really help you with your strike price selection. This is when the ThinkorSwim platform is at its most utility. It's doing its best work for you here, Alex. But you also don't want to be...
Beautifully said. Of course, Apple moved a little bit higher throughout the session, too, so that might be making it a little bit closer than it would have been earlier. But also, to your point, the 270, 272.5, giving yourself another $8. You can get that for 50 cents. That's a fifth the width of the strikes. Also another potential option there for you as well. But let's quickly talk about the risk on this particular trade before we take a quick break, Kevin. Of course, whatever call vertical you're selling or put vertical you're selling, the amount of credit received is going to be your max profit. the width of the strike. So in this case, we did a $2.50 wide spread. If we collected 90 cents, you're going to have $1.60 in risk. Of course, for every one of those, it's $160 in max risk compared to $90 max profit. Just something we always want to be conscious of. But Kevin, we're going to take a quick break. When we get back, we're going to have our cash tag segment. We're going to welcome in Andy Swan from Lifefolio. We're going to talk some coronavirus and fear index on their end, and we'll see what's going on social media. We're going to take a quick break, but we'll be right back. $2.50 wide spread. If we collected 90 cents, you're going to have $1.60 in risk.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
I'm Nicole Petalides, coming to you live from the NASDAQ every single day from the opening to closing bell. Tune in to TD Ameritrade Network.
Welcome back to Fast Market. I'm Alex Coffey, joined by Kevin Hanks. Kevin, S&P's just turned red on the session, so keeping our eyes on that. Currently down 50 cents in the E-mini S&Ps. That's 23.8875. So, I mean, you pointed out we're not out of the woods yet on this market, but there's still a ton of session left for this week. It's been a crazy week thus far. Still a lot of green on the board in the individual stock front, and the other three major indices are all actually up on the session as we see there. But when you're looking at this, Kevin, volatility is certainly not, out of this market, even though the VIX is down 8.4 points still to 63. We talked about this, countless times over the last couple of weeks is, in 2008, 2009, volatility peaked in October of 08, but the market didn't bottom until March of 2009. Just because volatility is coming in doesn't mean the market can't move lower. And at least right now in the S&Ps, that's what we're seeing. Kevin, thoughts on that? Volatility is certainly.
By the way, Alex, and good point there. I'm watching this as well. Remember something. We're sitting right now. The VIX is now ticked back up to 64.5. A 64 VIX implies a 4% move a third of the days. So volatility, even though that number's come in, it's still representing big implied volatility, big percentage moves on a, daily or 1 out of 3 basis. So yeah, volatility is nowhere near gone or leaving this market. It just may have come down from completely unsustainable levels. 64 VIX implies a 4% move.
On that note, Kevin, let's hit social media for our cash tag segment. We'd like to welcome in Andy Swan, the co-founder of Lifefolio.com, to join the conversation here. Andy, good morning to you, and thanks for joining us. I wanted to talk a little bit about what we're seeing in terms of the market action. And then also, if you want to just, jump right into it, you guys are tracking the amount of social activity and mentions around this coronavirus situation. And you're also tracking your fear index. So ever you want to take this and explain what's going on on your guys' end, feel free. But Andy, enlighten us here.
Yeah, so the Likefolio Fear Index does a pretty good job of tracking investor fear in terms of conversations that investors are having around ticker symbols and, more of the investor chatter. Normally, Likefolio's, focused on consumer behavior, but in this case, the Likefolio Fear Index gives us a gauge much like the VIX in terms of investor fear and that kind of negative sentiment in the market. And right now, we're seeing that level at the highest that we've ever recorded, which should be no surprise. The market has moved an incredible amount over a prolonged period of time, and there's a lot of volatility, which scares investors in a really big way. And so what we can say right now is that investor fear is extremely high. I don't think that there's any surprise there. But when we look at, the mentions of coronavirus on social media, and specifically Twitter, and we look at that over time, we're actually seeing a drop-off in that, and there's kind of two reasons for that. Number one, people are not referencing the virus by name anymore. They're just saying this, like this is getting really bad, or when will this end? And that's impossible for us to track. So there's, a loss of fidelity there for us. But the other part of it is we're starting to see a sense that this is becoming a little bit more settled in as a way of life or as an expectation. And, we see that in the markets on the investor side, and we also see it just in the general population side, where investors are getting used to 4 and 5% moves. Those really aren't even hitting the radar in terms of what people are talking about. And from a general population perspective, you're starting to get used to, all right, this is closing down, that's closing down, new case there. Nothing's really surprising at this point, at least in terms of the normal news cycle that we're seeing now. So, investors in the general public seem to be starting to get used to a new normal. We'll see how that translates over the weekend. It feels like every few days things change so much. It's kind of difficult to say what's next, and that's reflected, I think, in volatility in stock prices. This is closing down, that's closing down, new case.
Andy, hold that thought here, and it's a lot of good information. I think the idea of this maybe fatigue around the coronavirus just because it's becoming more of the normal way of life is certainly an interesting conversation. But the New York governor, Cuomo, just announced 100% lockdown of the workforce, and they all must stay home now in New York State. So this is breaking news. Maybe this is what's led to some of this volatility that we've just seen in the last couple minutes here. Kevin, I want to get your thoughts on that announcement. Is this expected? Is this unexpected? Is there more cities to follow from what you're seeing? Just because it's becoming more of the normal way of life.
I think it's expected based on what we saw out of California last night, guys. I think this is just a very similar one. I think that all they're doing is basically saying, don't go to work. If you have to go to the grocery store or the pharmacy or something like that, you're fine. But they don't want people, I appreciate what they're doing. Let's face it. The West Coast and the East Coast seem to be where the greater density of this virus is. And sorry, Andy, I hate to say this virus is hanging out. So the fact that they're taking these drastic steps, I think is the markets should take some comfort from this, that these municipalities are doing everything possible to stop the spread of this virus. I appreciate what they're doing. Let's face it.
Yeah, and Andy, if you tie this into what you guys are tracking and how you're I was just going to say, if you're trying to say how you're tracking things here, Andy, what do you make of this? Is this kind of what the sentiment around what you guys are seeing is leading to people starting to think, or is this a surprise in terms of what the public might be expecting?
No, I actually think that this is not a surprise, just like Kevin said. I actually think if the stock market can rally, off of this, or just not put in massive lows today, that would actually be a really bullish sign. The entire state of New York closes down and the market doesn't blink an eye, or rallies, I think would be a real indication that some significant negativity is already priced into this market and that there's upside to go from here. Look, I think it's really strategic of Cuomo to do this on a Friday at noon. It's just, you know, over the next 3 days, let's just keep people in their homes. And then, like I said, things are changing so fast that by Sunday we may have a whole different take on this entire situation. And so keeping people at home and non-essential business activities to a minimum over a weekend seems pretty smart to me. And I think that the market, you know, I know it's down a little bit since the announcement, but this type of, you got to think, what would have happened 2 weeks ago on this type of announcement? The market would have moved 7 or 8% to the downside in a few minutes. The fact that it's not tells me that this was expected in some ways, and it is a little bit of that new normal that we were talking about. And so keeping people at home and
I think that's a brilliant point, Andy, and I think that's actually exactly how I'm looking at this is, yeah, we did sell off, but I mean, we're down 8 S&P points right now on the session. A couple weeks ago, to your point, this would have been, unthinkable, and now it's almost priced in, and at least, I don't want to say it's fully priced in because we have no way of knowing that for sure, but based off the market reaction, it doesn't seem to be that surprise that maybe you would think something like this would be, just given how significant it really is. But this idea that it's short term, it's at least not going to be forever like this, I think, calms some as well. But I want to talk more about your fear index and your data as well, Andy. That's what we have you on here for, and I want to make sure that we really cover this here. Tying this in, looking at your fear index, the chart that we're looking at is actually a 7-day moving average. So I'd expect that this is going to have a little bit of a lag in terms of when it's going to peak out. But do you do that to smooth out some of these spikes that are maybe around when you get the random halts of the market at the 7% level, that maybe it comes in on some of those morning talk shows and things where maybe people who aren't normally watching the market are now suddenly talking about it?
Yeah, that's exactly why we do it. We found that a 7-day moving average on this index has been, it's smoothed things out. It's given less, kind of false positives in terms of absolute market fear, and that's exactly why we do that. And I'll tell you what I'm doing this weekend, while I'm sitting at home, is I'm going to be going through looking at, for opportunities in the stock market. I'm trying to stay positive. This is a very negative time, so you try to stay positive, look for opportunities, look for silver linings. The way I'm thinking about that is, all right, let's look for companies with a really great balance sheet that have a really loyal fan base, that when they open back up, they're going to be in good shape. We kind of call those, the blue chip beaten down kind of names at this point, and they're going to survive a shutdown, and when it comes back, it's going to be good for them. And then the other side of it is, like we've talked about on this program before, what are the companies whose adoption rates have accelerated greatly because of this crisis, and whose business model is built to take advantage of that for the long term because they're subscription based? And I think when you start thinking about things in those terms, the opportunities become a little more clear, and we can do some good things from here. But I'm not saying markets are bottoming or anything like that, but I do think that it's time to start, like Kevin said, start putting together that shopping list of companies that you might like to own in 2022, and start looking at the next week, 6 weeks, 12 weeks, whatever it ends up being, as an opportunity to get in. Start thinking about things in those terms.
And Kevin, I want you to join the conversation here as well. Thoughts on what Andy just kind of pointed out, building that shopping list, but also to the point that he made, a moment ago regarding the fact that, what if this is starting to be the expectation and not necessarily a surprise on markets when the S&P is only down 5 1/4 on this shutdown in New York, and maybe what's going to be a nationwide shutdown in the near future?
Yeah, I mean, there's an economics term called diminishing returns, right? And every time something happens, the effect of what happens gets less. I mean, the fact that in the last 18 hours, we've announced 2 major cities in the United States shutting down, and the E-minis are down 4 now, which means the United States and the U.S. financial markets are starting to come to grips with where we are, how we're fighting this, and it looks like to me like the United States is all in on getting this stamped out and reversed. So that being said, the way these municipalities and towns are fighting this, people are starting to get less of a negative sentiment. Now, I don't mean that's positive yet. I mean, we're still, people are still worried about the duration of this, but people are starting to get less negative and settle into their new way of life as we are here. And business still goes on for a lot of people, and it looks like this administration is ready to help and assist and bail out these sectors and companies that need help. I mean, can you imagine any world where the United States doesn't have a major airline builder and allows Boeing to go out of business? That will never happen. They will never simply rely on Airbus to make planes. So Boeing will never go out of business. The United States government will guarantee that, if not for the military and that. So things like that, you can start to make bets on good quality companies. You're seeing that being made today as some of the people are migrating towards the highest quality companies in these indices. And I think you're seeing that right now. To make planes.
Yeah, Kevin, we can't ever say never, but I hear what you're saying. I think it's a good point. But Andy, I wish I could let you go easy, but real quick before we let you go for the weekend here, give me 1, 2, 3 names maybe that you're thinking about putting on that shopping list, and maybe 1 or 2 that you're avoiding.
I'm going to avoid the cruise lines. I don't think that comeback is anytime soon. I think that behavior has changed fairly permanently. I think, you know, when I look at airlines, I think those come back pretty nicely. You're already starting to see that today. You know, subscription-based services like Netflix, Amazon, Walmart is getting a nice uptick in its mentions of subscriptions to groceries, and that behavior is changing. And so I think there are opportunities out there and some pretty big names, and then there's some undiscovered that I'm going to really work on figuring out this weekend. But I will say, you know, as we go into this weekend, I just think everybody should kind of start to think about the idea that the market not being down 2,000 Dow points today on 2 major states closing is pretty interesting to think about. And where does the most likely movement of this market in terms of a massive movement come from? And if this didn't do it to the downside, you really have to start to wonder what's possible as we go into next week if the sun starts to shine just a little bit.
Yeah, well said, Andy. Hey, thanks for taking the time to join us this morning. Have a good weekend. You stay safe, and we'll look forward to talking to you again next week. Kevin, we're going to take a quick break. When we get back, we'll continue talking this story with New York, and we'll also take a look at Tesla as well and talk an example trade in that name. So stick right here on the TD Ameritrade Network Fast Market. We'll be right back.
What's possible as we go into next week if the sun starts to shine just a little bit.
Turn on my TV and boom, it's got all my favorite shows right there. I wish my trading platform worked like that.
Well, have you tried ThinkorSwim? This is totally customizable, so you focus only on what you want.
And it's got screeners and watch lists.
You can even see how your predictions might affect the value of the stocks you're interested in.
Now, this is what I'm talking about.
Yeah, it'll free up more time for your true crime shows.
British baking competitions.
Didn't beg you for a crumpet guy.
Focus on what matters to you with ThinkorSwim.
Turn on my TV and boom, it's got all my favorite shows right there. I wish my trading platform worked like that.
Well, have you tried ThinkorSwim? This is totally customizable. You focus only on
Screeners and watch lists.
you can see how your predictions might affect the value of the stocks you're interested in. This is what I'm talking about. More time for your true crime guys. British baking competitions. Beg you for a
Hey everyone, this is Anoop with the ThinkorSwim product team, and I'm here to talk about ETF data in our Fundamentals tab. To see this, navigate over to the Analyze tab and select Fundamentals. By clicking here, you can see a list of ETFs. Or if you know a State Street ETF, you can type it at the top. Here you can see fund specifications, fund weight, the top 20 holdings within the funds, and much more. Find out more at our website, tlc.thinkorswim.com. Hey everyone, this is Anoop
Technical traders, the chart master is in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
I'm Nicole Petalides, and there's only one place making sense of the markets in a way that matters to your investment. No politics, no noise, from bell to bell and beyond. Tune in to TD Ameritrade Network.
Technical traders, the chart master is in the building. Trends, support and resistance, key patterns,
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
Welcome back to Fast Market. I'm Alex Coffey, joined by Kevin Hinks. Kevin, S&P swinging back into the green, up 8 now on the session. The NASDAQ and the Russell are leading the way higher, both up over 1%. But let's come back to this story with New York going into lockdown now, government mandated here. It looks like the New York Governor, Andrew Cuomo, is actually holding a press conference as we speak here, announcing these new measures that they're going to be taking in response to the coronavirus, Kevin. But he also said during this press conference that neighboring states, including Connecticut, Pennsylvania, Delaware, and New Jersey, are also considering telling their state employees to stay home unless they are considered essential service providers. So, Kevin, to your point, what you were just talking about in the last segment, this is starting to be almost a domino effect, but it may already be the expectation. It's just a matter of when at this point, and the market might even be looking for the sooner the better. During this press conference, that neighboring states.
Yeah, people may be consuming and digesting this information and saying, we're already all home. Who are you sending home other than essential services? Isn't that kind of, aren't you just simply stating what has already happened? So I think that's why you're seeing the E-minis sold off. E-minis are now right back up. They're positive again. So, you know, this market is taking these, like I said, you're seeing some diminishing returns on the bad news. That's really positive sign. Of course, subject to change without notice. That doesn't mean we're out of the woods by any stretch of the imagination. But I think what Andy talked about is pretty accurate. The fact that some of this news is not really hurting the market, people can start to get a good feel from that, even if it's just a small good feel. So, yeah, I think this weekend's going to be pretty important, but here we are, Alex. On the bad news, that's really positive.
Yeah, and so, Kevin, I was talking about it yesterday. I think that those weekly jobless claim numbers are going to be important because it gives you, the feel of how many new people are potentially looking for some of those benefits in the short term here. But I also think, a point that we've been talking about, the coronavirus confirmed cases here in the U.S., of course, important. Obviously, any type of press conference and update from the governments, both at the state and the federal level, are important. But seeing how these other countries like China are coming along in their recovery processes, they're a month or so ahead of where the U.S. is hoping to be. Emerging markets are outperforming today. It looks like up about 3% as a whole, emerging markets compared to the U.S. here, at least in the S&P 500, up 15 basis points. So starting to see some of those recoveries elsewhere is probably important for this market as well to kind of, and the federal level are important. But seeing how these other countries like China are coming along in their recovery processes, they're a month or so ahead of where the U.S. is hoping to be. Emerging markets are outperforming today. It looks like up about 3% as a whole, emerging markets compared to the U.S. here, at least in the S&P 500, up 15 basis points. So starting to see some of those recoveries elsewhere is probably important for this market as well to kind of, and the federal level are important. But seeing how these other countries like China are coming along in their recovery processes, they're a month or so ahead of where the U.S. is hoping to be. Emerging markets are outperforming today. It looks like up about 3% as a whole, emerging markets compared to the U.S. here, at least in the S&P 500, up 15 basis points. So starting to see some of those recoveries elsewhere is probably important for this market as well to kind of, and the federal level are important. But seeing how these other countries
Great to have your company this morning. First, the number of coronavirus cases in the United States has soared over the weekend. A growing call from state leaders ordering their citizens to stay home is underway as well, as the total number of cases crossed 30,000. That's up tenfold from a week earlier. The economic fallout from the virus is becoming increasingly apparent as well, with growing calls now for even bigger contractions in the US economy in the second quarter. Myron Brilliant is Executive Vice President and Head of International Affairs at the US Chamber of Commerce. He joins us now from Washington, D.C. And Myron, it's great to have your analysis this morning. Thanks for joining us. I wanted to begin with some developing news that we're now hearing out of the US Senate, failing to get enough votes on this coronavirus bill to clear its first procedural hurdle. Voting is continuing, but what do you think the key sticking point is here?
Well, Dan, first of all, I wish I was coming on under different circumstances, but I think both the House Republicans and Democrats and the Senate Republicans and Democrats understand that no family and no business should go bankrupt during this pandemic. And so the effort underway, I think, will reach a successful conclusion, but there's obviously some negotiation going on with regards to the direct payments, the size of the loans are going to be available to businesses, small businesses, and larger businesses. And so the final shape of the package is coming into, I think, clarity, but they're still negotiating on some elements of the package. Everyone agrees we need a massive stimulus. That's what we need right now. We need an injection of liquidity, and we need some confidence in the system.
Just anecdotally, Myron, what feedback are you getting from your members about how the virus is impacting their business and supply chains at this time?
Well, it's obviously having a huge impact on consumer confidence, but what we're seeing is not just in the United States, but around the world. I mean, today I was on the phone with a company facing challenges in Malaysia, another company, a series of companies facing challenges in India. We don't want to see choke points. We don't want to see buy local provisions. We don't want to see export controls. We don't want to see tariffs. What we want to see is government working with the private sector to make sure we have commerce flowing, to make sure the supply chains work. This is a tense period of time. There's a lot of shifting going on and a lot of regulation for the public health. But we must make sure commerce still flows. So that's what we're working on here in the United States. We've had good conversations with the Congress and the White House about what are essential services, and we're having those same conversations all over the world with governments. Is government working with the private sector to make sure we have commerce?
Hey, Myron, this is Martin. Good to talk to you. Hope you're doing okay at home. On this bill, CNBC, our digital site, has obtained a draft copy of the bill, and apparently now the Dems are pushing for $500 billion. That's up from $150 billion for distressed businesses. I assume that would include small and medium-sized enterprises, the ones that are suffering the most. So that's good news. $58 billion for passenger and cargo airlines, $17 billion for businesses critical to national security. What I want to really ask you, though, is how your members feel about what the Dems are really pushing for, and that is trying to ban stock buybacks. I mean, what do your members, how do your members feel about that? What are they telling you?
Well, right now, I think the focus, Martin, is on broad-based relief. We have a lot of distressed industries out there. Obviously, small businesses, we're very worried about small businesses going bankrupt. Therefore, you got to make sure that they can pay their employees, keep employees on health care benefits. So we have very concerns about that, and basically Democrats and Republicans are aligned on that. But there are questions about how to make sure there are loans and loan guarantees and subsidies available to mid-sized companies and bigger companies. Businesses that are consumer-facing are distressed right now, right? If you're the airlines, if you're the retail business, if you're the restaurant business, these industries are facing enormous pressures, not only with layoffs, but obviously with high costs of keeping their operations going at a time when people are actually not on airlines, not at restaurants. So that's what we're focused on broad-based relief. We're not picking winners right now. We want to make sure that there is liquidity out there so that the system works, that businesses stay afloat. There's no bankruptcies because of the pandemic. We know that's going to be difficult, and the longer it goes, the more difficult it will be. But we're not picking winners in this process, and we're, of course, encouraging policies geared towards getting money into families and getting money into the small businesses, and that means some tax relief, payroll tax relief, for example. There is liquidity out there so that the
Okay, Myron, very quickly before we let you go, what I'm trying to figure out is your members, AmCham members, how do they feel about tariffs right now? This seems to be like the worst possible time to have tariffs continue. Are they pushing? Do they think that U.S. tariffs should come down, especially with regards to stuff that's critical to the medical supply chain right now?
Well, there's no question that the focus has been on things that will help deal with this crisis. So medical devices, medical supplies, and things related to medical care. We're not trying to say now this is the time to deal with all tariffs, although we'd like to. What we're focused is on tariffs that are at the border that are causing problems in our supply chain. So that's where the focus is: medical care, medical health products.
Myron, thanks for joining us today. We appreciate it. Looking forward to speaking with you again soon. That's Myron Brilliant there from the US Chamber of Commerce. Moving on, and we're off for a quick break here on Squawk Box, but do stay with us. We're going to have another busy day of trading in Australia and around the region, with ASX futures firmly in negative territory. We also have US futures limit down, oil prices also sliding as Asia comes online more when Squawk Box continues. Stay with us. Moving on, and we're off for a quick break here on Squawk Box, but do stay with us. We're going to have another busy day of trading in Australia and around the region, with ASX futures firmly in negative territory. We also have US futures limit down, oil prices also sliding as Asia comes online more when Squawk Box continues. Stay with us. But do stay with us. We're going to have another busy day of trading in Australia and around the region, with ASX futures firmly in negative territory. We also have US futures limit down, oil prices also sliding as Asia comes online more when Squawk Box continues. Stay with us.
This week in corporate results, we'll hear from the world's largest pork producer, WH Group, oil majors PetroChina and CNOOC, and banking giants Bank of China and BOCOM. In economic data, Hong Kong set to release CPI today, industrial production tomorrow, China industrial profits out on Friday.
We'll continue to watch the economic impact of the coronavirus on the South Korean economy, with the government expected to announce additional support measures this week, while companies are reeling from the spread of the virus, with the Samsung Electronics reportedly shutting its TV production line in Slovakia this week. Over 1,000 listed companies, including Naver, Celltrion Healthcare, and Hyundai KAL, are set to hold their AGMs this week as well. The March read of consumer sentiment will cross on Friday.
On the floor of the New York Stock Exchange, the big board decided to temporarily close its iconic floor beginning Monday after a positive coronavirus test. Trading on its electronic platforms are unaffected, and the financial markets as a whole remain open. And Nike reports earnings on Tuesday. We'll see how much results were hurt by the recent China shutdowns. The footwear and apparel maker should give some color on how the pandemic across the U.S. and Europe is impacting its operations. And how ugly will it be? Weekly jobless claims data will be out on Thursday. One Goldman Sachs economist expects the figure could hit a historic 2.25 million claims. Trading on its electronic platforms are unaffected, and the financial
Well, it's been an incredibly busy weekend of stimulus for the Antipodean markets, but taking a look first at how the ASX futures are shaping up to open, we're looking at an around over 7% drop for the implied open. This is after, of course, the New Zealand markets are now around about 7.5% down, following on from the RBNZ basically injecting $30 billion of quantitative easing into the markets. They're going to be buying up government bonds, and this is going to help with the New Zealand government likely to engage in further stimulus actions throughout the course of the year. By the end of this year, it's very likely that the RBNZ is going to be holding around a third of government bonds that aren't actually inflation linked. I do want to get you across the Australian stimulus as well that we have seen coming through, around about a 66 billion Australian dollar further spending measures, but all in all we're seeing around about 189 billion. And here's what the Prime Minister Scott Morrison had to say about that extra spending earlier yesterday. Listen in.
10% of the size of our economy. That is unprecedented in this country. What we'll be doing, as I said, is focusing on those in the front line, those who will be feeling the first blows of the economic impacts of the coronavirus. We'll be supercharging our safety net. We'll be supporting the most vulnerable to the impacts of the crisis, those who will feel those first blows.
And there was a raft of measures introduced by the government. They're basically going to have a welfare wage of around $1,100 a fortnight for people. Further stimulus measures when it does come to SMEs, government-backed loans. So this is going to be absolutely critical as we are pushing ahead with this coronavirus impact that is being felt with shutdowns coming across Australia. But don't go anywhere. We're going to have all the market action from the Sydney Open plus across Asia when Squawk Box returns. Basically going to have a welfare wage of around $1,100 a fortnight for people. Further stimulus measures when it does come to SMEs, government-backed loans. So this is going to be absolutely critical as we are pushing ahead with this coronavirus impact that is being felt with shutdowns coming across Australia. But don't go anywhere. We're going to have all the market action from the Sydney Open plus across Asia when Squawk Box returns. Welfare wage of around $1,100 a fortnight for people. Further stimulus measures when it does come to SMEs, government-backed loans. So this is going to be absolutely critical as we are pushing ahead with this coronavirus impact that is being felt with shutdowns coming across Australia. But don't go anywhere. We're going to have all the market action from the Sydney Open plus across Asia when Squawk Box returns.
enduring a great national trial, and we will prove that we can meet the moment.
Good morning, Squawk. On a Monday, President Trump there approving major disaster declarations for New York as well as Washington as the number of U.S. coronavirus cases now surges past 30,000. Meantime, in markets, U.S. futures are limited down again after their worst week since the GFC.
Meanwhile, it's back to the drawing board for US lawmakers after a key procedural vote on the third stimulus bill fails to pass the Senate. Talks now continuing on a revised version amid growing division along partisan lines.
Meantime, oil prices are plunging out here in early Asia. We've got prices at about 21 a barrel, closing in on 20 even amid the growing fallout from the coronavirus.
Welcome to Squawk Box. Dan Murphy with you this morning alongside Martin Song. Let's get a quick check on what's happening right now with the start of trade in Japan. Coming online in the next hour, you can see here CME Nikkei futures showing a more than 200-point decline when trading begins. Dollar yen also tracking at 111.07. Meanwhile, Australia's markets kicking off trade like this. You can see the ASX 200 firmly in negative territory, down 1.3% this morning. The All Ords down 1.2%, and the Australian dollar lingering at an 18-year low at the moment, buying just 57 US cents. New Zealand's market has also been open for 2 hours. It was the first to react. At the moment, we see the NZX 50 down 7.85%. The RBNZ announcing earlier this morning a massive QE package, starting with the central bank's purchase of 30 billion Kiwi dollars worth of government bonds over the next 12 months. So New Zealand pushing ahead with its first round of QE. Meanwhile, checking in on US futures, and this is where the action has been this morning. President Trump giving a briefing just in the last hour saying that he had approved disaster declarations for New York and Washington and that California was also on the way. But we're seeing a very negative reaction in the US futures market, clearly on signs that lawmakers in the United States are not progressing as fast as expected on this coronavirus recovery bill. US equity futures are limit down. The Dow called to open 962 points lower, Marty. Looks like we could be in for some rough trading as Asia comes online.
Yeah. Indeed, better brace, Dan, and you're right. Lawmakers in the Senate not making much headway at all. They're continuing talks on a massive stimulus bill after a key procedural vote failed. President Trump is speaking a while ago saying that they are close to a deal. Now, the Democrats, they have said there was no agreement on the bill put forward by the Republicans. The Senate's top Democrat, Chuck Schumer, saying the bill had many, many problems, in his words. And House Speaker Nancy Pelosi saying that the Dems would put forth their own bill. White House Economic Advisor Larry Kudlow has said before that the package could be worth up to $2 trillion with a T dollars, or the equivalent of about 10% of U.S. GDP. Let's bring in Clete Willems, a partner at Aiken Gump, an international law firm that helps U.S. businesses navigate policy. He's also a CNBC contributor. He joins us live out of the Capitol, Washington, D.C. Clete, good to talk to you and appreciate your time. This package that is being fought over in Congress right now, things are sort of stalled. There's a Mexican standoff, if you pardon the phrase, going on right now. For clients that you advise, that pay you, what would they prefer to see? What
we need to do.
Absolutely. All right, Clete, we'll have to leave it there. Appreciate your analysis this morning. Thanks for joining us. That's Clete Willems there at Akin Group. Meanwhile, more developing news out of Australia, and we're, of course, following the market reaction very closely, but we are looking at the ASX down sharply this morning. Losses accelerating. Let's go live now to Will Klouris with an update. Will, what are we seeing right now?
Well, it's a pretty egregious situation right now, Dan. We're seeing financials off by around 10%. The ASX 200 is down over 8%. The Australian dollar also showing some
Welcome back. The coronavirus impact is, of course, being felt all over the world, and Hong Kong's finance chief, Paul Chan, has a grim prediction for the extent of the damage. Live now to Emily Tan, who has been following the conversation. Ems, what did he have to say?
Yeah, this is coming through from his weekly blog. Hong Kong's financial secretary saying that the extent of the coronavirus outbreak that we're seeing in Hong Kong is going to be worse than that of the SARS outbreak back in 2003.
Welcome back. The coronavirus impact is, of course, being felt all over the world, and Hong Kong's finance chief, Paul Chan, has a grim prediction for the extent of the damage. Welcome back. The coronavirus impact is, of course, being felt all over the world. What did he have to say?
Yeah, this is coming through from his weekly blog. Hong Kong's financial secretary saying that the extent of the coronavirus outbreak that we're seeing in Hong Kong is going to be worse than that of
get it.
Medical doctrine has potentially dangerous as partial truth implemented as the whole truth. I should be hearing like, wow, dude, that is so right on. Any medical professional, bioscientist, healthcare practitioner, or layperson for that matter, who wishes to gain insight into the origins and nature of infectious and chronic illnesses against the backdrop of a marvelous view of life process must consider Beauchamp. So when you look at this, look at the health of our population. Is it because we have 60% of our adult population is sick in America? Is it because they have the coronavirus? You're right, it could be treated with a squeeze of lime. No, God, there's one in every crowd. Okay, no, because they have a sick food supply and a sicker medical system, okay, and high stress. That's what's causing it. Why do we have 54% of our kids with the lowest infectious rate in the world and the highest chronic disease rate and more than double vaccines of almost any other country? Don't look into that. Let's have this virus so it distracts you. You know, there is nothing going on here. Keep moving. I know, my Jedi mind tricks won't work on you. Okay, so Thus, he clearly presented the idea that the physical life of higher biologic forms arise and is dependent upon and recycled by microscopic beings. Simple, immediate proof of dependence is the indispensable bacteria population of the human GI tract. We have a symbiotic relationship until the doctors wake up to realize that it's not fighting the bug. This doesn't work. If you can't fight the bug in a hospital that causes secondary infections because we're trying to fight all the bugs, but then we look at the human being and you have a ton of bugs in your gut, a ton of bugs on your skin, and if you wipe that out, you die. Okay? This is really important. We have a harmonious relationship. We have to change the entire system. Am I saying you got to break down the entire system and build something that, if confronted with a bacteria-resistant or antibiotic-resistant bacteria, that instead of creating higher antiseptics, higher and stronger antiseptics, that you go in there with normal flora and spread it around? Yeah. Spread a little dirt, little bacteria. So we realize that we have this harmonious relationship instead of an adversarial relationship with something that you need to keep you alive. Don't panic. Okay? You're right, panic is good occasionally. Okay, don't look for a new medical intervention. The current ones are ridiculous and the future ones will be worse. Okay? There's nothing that's going to save you other than your own immune system. Strengthen your immune system. Know that viruses are parasites and use host material to replicate. So if one person cannot infect the entire group here, you would have to infect like 2 or 3 people, and then it would use their DNA to infect 2 or 3 people, and then use their DNA, and it would get successively weaker, just like all viruses do. And no matter how virulent the virus, people recover. People recovered from Ebola, people recovered from the Black Plague, people recovered from everything. Okay. Vitamin D3, vitamin C, magnesium, activated charcoal, deep sleep, sauna, hot soups, garlic, onion, liquids, exercise, conscious breathing. Man, if you're doing the conscious breathing, you're oxygenating. Okay, viruses tend to like the lower aspect of the lung, and the deep breathing uses that diaphragm. I mean, it just makes sense. And essential oils, that's what we use. You know, we'll use essential oils all day long. Not only does it smell good, but it's antimicrobial. So it doesn't kill everything. It just weakens some of the pathogenic bacteria. It's not going to kill everything. It just weakens it a bit. So go to Extreme Health Academy. I mean, I answered 37 questions. Does anyone know what it's like to answer one question that takes like 7 or 8 minutes, and you have to go into details on why the bowel is disturbed? Okay, imagine 37 times. So I had a fun Sunday. Okay, but get on Extreme Health Academy, type in Bergman 14, and you can listen to the 37 questions or hang out with the forums. You're going to see some really brilliant people on here. And the cruise, it's a month and a half away, and it was kind of fun too, because we just had a couple of sisters down in Mexico, and they said, "We're going." And wow, they said it with such authority, it kind of scared me a little. Okay, do you want to hang out? Yeah, but this is fun. I mean, we're going to hit Athens, Crete, Cyprus, and Israel. And if anybody has any ideas, because we're going to Haifa, I've got to, I don't think she's going to watch this. I've got to get my bookkeeper an olive wood carving. And I have no idea what to get her. Okay, she's Christian, so probably, you know. In Israel, they have olive wood. Okay, that's what I'm looking for. I'm, probably Christ like this or something. Okay, so, yeah, when you read the Bible, the best part about Christ is when he's knocking over the tables. I think, yeah, buddy, forget passive. No, I like a little bit on the aggressive side, protecting his Father's house. That's cool. This is what we need: proper nerve supply, exercise, nutrition, no fear up here. It's not the virus. It's not the virus. It's the immune system. You strengthen your immune system, you got no worries. I'm not saying strengthen your immune system and let's party with some, cholera. Just be normal. Okay, now, any questions? Because next week, I want to stop talking about the frigging coronavirus and go over how to rehab and rebuild shoulders. Okay? Thank you very much. Did you just cough?
Yes.
Back away! Be gone, child! Isolate her.